All right. Hello, everyone. Welcome back to the Relay Bitcoin podcast. Today I'm joined by Alex or Alexandre, who is based in France, where if you look at my posts, we with Relay are setting up a company in Paris, probably close to where you live, Alex, and we're expanding to the EU through our French entity, getting the MiCA license, hopefully very soon, right? And working on onboarding more people to Bitcoin. But that's not actually what we're going to talk about, because you, Alex, beside of being in France, you are, of course, now in the last few months, I would say, or even probably a year now, you have become a very prominent person in the whole Bitcoin industry in general and in the Bitcoin Treasury company category more specifically. So I'm very happy to talk to you today. How are you on this nice Friday?
Well, thank you, Julian. Just adding the contribution to Bitcoin adoption through Bitcoin Treasury Company, and thank you for the invite. And excited to our conversation. Thank you.
Yeah, thank you. So I attempt to explain topics around Bitcoin to people in a very easy and simple way. Now, Bitcoin is already quite complicated, right? And so Bitcoin treasury companies, this new emerging trend is again, because it's about financial engineering and like what Michael Saylor does with also financial products now around the Bitcoin treasury company and just raising money to invest in Bitcoin, and the stock skyrockets, and like people call it a Ponzi scheme. It's so probably confusing for most of the people that maybe don't even really understand Bitcoin. And now there's this thing. So my first question would be, how do you explain this trend, Bitcoin treasury company, in simple terms to people?
We are in a context where Bitcoin is being adopted increasingly by institutions over the world. It is the only asset the United States government does not want to sell. And that is quite special, and it is for a reason. The reason is that it is the only asset on Earth that has global accessibility and absolute scarcity. And for this reason, when Bitcoin is the best performing asset over the last 15 years, the only thing better than Bitcoin is more Bitcoin, as Michael Saylor says. And Bitcoin treasury companies are the best risk-adjusted way to get more Bitcoin exposure over time. And the Bitcoin treasury company is a listed entity that has operations as well. And part of the operations is not only on the P&L of the company, the operational activity, but especially on the balance sheet side to leverage the elasticity of capital markets by issuing securities to accumulate the asset that has the more scarcity on Earth and that is the most inelastic on Earth. What is used to say our shareholder Fulgur with Nicholas Brand, the most inelastic asset on Earth, which is Bitcoin. And so in doing so, the Bitcoin treasury company is able to securitize Bitcoin, and by doing so, to provide a form of exposure to Bitcoin to a set of investors in the traditional sense that represent, frankly, 95% of global capital. Because global capital today is stored in securities mostly, at least liquid investable capital with securities like stocks, like debt. And so those investors over the world prefer to have securities as part of their long-term capital. And so a Bitcoin treasury company is providing different forms of Bitcoin exposure to those investors in a way that also maximizes the potential for Bitcoin outperformance over time with the increase of the key indicator of Bitcoin per share over time.
So basically, if I invest in Bitcoin, I just have Bitcoin, right? I buy 0.1 Bitcoin, I keep this Bitcoin, that's great. If and the value will go up in 10 years and I will be very happy, and I might be able to, with this 0.1, I will be able to maybe buy a house with it, right, in 10 years. Now, if I invest in a Bitcoin treasury company like yours, there's this BTC per share that goes up, because basically what I'm investing in is an Bitcoin accumulation company. So you will do everything. You will use the whole all the tools for raising money in the public equity field or financial engineering to raise more of this elastic money, the fiat money that actually goes down in value, so soft money, to buy more of this hard money, the inelastic asset, the best capital that has ever been invented, which is Bitcoin, right? So if I invest in a Bitcoin treasury company in 10 years, I expect to have more Bitcoin actually than I have bought now indirectly. Is that how to understand this?
Yes, the value proposition of a Bitcoin treasury company is the outperformance potential of Bitcoin. And how to do that? Well, it is to grow the net asset value of the Bitcoin treasury company in Bitcoin higher over time than its current market capitalization. And so if as an investor you invest in a Bitcoin treasury company that is worth 500 million euros of market capitalization, and over time the company is able to grow its net asset value above 500 million, then that means that potentially you have accrued a lot of Bitcoin per share, and that you may have started with 1 Bitcoin per share, and that now, after a certain period of time, you are at 3 Bitcoin per share. And so that provides a Bitcoin amplification engine for Bitcoiners that already live on a Bitcoin standard to have their base of Bitcoin as a long-term store of value, but on top of it, to have a potential to have even better return on their Bitcoin. And so the objective here is not a fiat outperformance. The objective here is that you gain more capacity as an investor to, in time, be able to get more Bitcoin. Because if you invest, imagine 10 Bitcoin or 100 Bitcoin as an investor in equivalent in a Bitcoin treasury company, and your sats per share go by 3x, then there is a possibility that your purchasing power with how those shares will go up in time based on first, of course, the price of Bitcoin, because the company has Bitcoin on its balance sheet, and then based on the growth of the sats per share beyond the premium that has been paid at the beginning, then that provides with a form of levered Bitcoin exposure to the investor that is providing with outperformance of Bitcoin, and that at the end of the day can provide with the ability for the investor to, at some point in time, be able, it's not necessary, but to be able at some point in time to also eventually potentially sell the shares and buy more Bitcoin too. So that is definitely also a long-term value proposition, because you can be conscious that as Bitcoin has its own cycles of going up and down in terms of its purchasing power, but over time it's been up only because of its fixed supply and, of course, monetary devaluation. Then a Bitcoin treasury company is capitalizing on Bitcoin itself. And so you should expect a lot of volatility if you are looking at fiat prices. but you should expect as well a lot of increase in Bitcoin per share, in
Mm-hmm.
SAT per share. And that is the role of a Bitcoin treasury company, is to maximize over time the number of SATs per share by issuing securities with pre-existing or embedded premiums in the market and using the proceeds to accumulate Bitcoin in a way that increases your Bitcoin per share. And by doing so, uh, of course, companies like Strategy in the US, that's been the pioneer in Bitcoin treasury companies, have been able to outperform Bitcoin over a certain period, 3 to 5 years, by 3x. Capital B in France, we have been able to outperform Bitcoin by 8x over a period of 10 months. Metaplanet has been able to significantly outperform Bitcoin as well. And so you see that a Bitcoin treasury company is first extremely aligned with the interests of Bitcoiners, because a Bitcoin treasury company is run, if it's properly run, it's run by Bitcoin maximalists that are working for the acceleration of Bitcoin adoption in capital markets and as well to normal individuals, because at the end of the day, Bitcoin treasury companies are listed entities that over time form part of indices. And those indices are also part of pension programs and uh, are at the end of the day going into the hands without them knowing of everyone. And so that provides with more exposure to Bitcoin to more people, and that is overall net positive for the Bitcoin industry. It's orange pilling a lot of professionals at corporations, at banks,
Mm-hmm.
at traditional investors as well, and that's also very good for Bitcoin. And so, as a Bitcoiner, by taking a form of exposure to a Bitcoin treasury companies, you definitely also contribute to that greater adoption as well. That doesn't replace Bitcoin direct ownership. In fact, what I like to say is if an investor is worried about the price of a Bitcoin treasury company, the most probable reason is that this investor doesn't have enough Bitcoin first. So I would say that a Bitcoin treasury company is the hurdle rate of an investment after an investor has come on the Bitcoin standard. Because uh, part of, and I would argue a great part of very wealthy Bitcoiners have started allocations to Bitcoin treasury companies.
Mm-hmm.
And so if you are living on a Bitcoin standard, Bitcoin treasury companies are the new hurdle rate.
Mm-hmm.
And in that sense, it is of crucial importance if you are a Bitcoiner and if you believe in Bitcoin, in the power of it, in the long-term inevitability of Bitcoin being adopted in the financial world, because Bitcoin is a black hole and will inevitably eat traditional finance. It is an imperative to take advantage of it instead of looking at it without participating. And then
Mm-hmm.
it is more a question of, for each investor, their one's own economic calculation of the potential risk that that entails and the potential return that that entails. And each investor has to perform its own economic calculations.
Mm-hmm. So, what do you use in terms of fundraising? There's this what you described works for, as you said, listed companies because they have access to public markets, public capital markets, like MicroStrategy. For the last 5 years, they have used all sorts of ways to raise money. More because, as you said, the business of a Bitcoin treasury company is basically to raise more money to buy more Bitcoin, to raise more money, buy more Bitcoin, so to increase this NAV. and to increase the BTC per share for their shareholders, right? So how do you do that? What are the ways you raise capital to buy more Bitcoin in the long term?
Yes. There are varied tools and options, especially in mature capital markets, such as the US, Japan, Europe. There are a lot of options for a listed company to raise capital. The first tools are definitely equity in private placement. That means that a company can issue new shares to specific investors in return for, of course, an investment, either in fiat or in BTC. And the investor sends fiat and or BTC and receives shares as a result, and that allows the company to increase the number of Bitcoin on the balance sheet and to sell shares at either a pre-existing or an embedded premium. That's the first one. A second one is what we have done at Capital B, the first one in the world, a BTC denominated convertible note with an embedded premium of 30% over 5 years. That I would insist that since a Bitcoin Treasury company is capitalizing on Bitcoin and a Treasury is a long-term endeavor, then long-term instruments are of utmost importance rather than short-term risk. And so we have done that with a 5-year maturity. Then you can also have more institutional capital raises with what is called accelerated book builds that are run by traditional financial intermediaries. And those can be conducted with traditional funds that can invest in those. It's still equity private placement, but with rounds that are coordinated by one financial institution, for example. Then you can also have what is called public offerings, and it's the ability for the company to conduct the offering of new shares, but with the optionality to subscribe to all shareholders, not only specific investors. That typically includes a prospectus to be issued by the company and approved first by regulators. And that includes a period where investors can subscribe to the shares, all of them. You can also do specific financial instruments, such as convertible bonds in fiat as well. I mentioned the ones in BTC, but you can also do in fiat, of course. And that's typically institutional investors that have the mandate over a specific region to allocate their capital to this specific type of financial instrument. In the EU, that represents a 60 billion market in and of itself. In the US, that is a 90 billion market. Strategy has taken 7 to 10% of this market in 2024. And of course, if Capital B were able to capture such a similar rate, that could mean 3 billion euros in and of itself. And the market cap of the company is 300 million. So you see that there is a lot of market to be pursued, of course. Then you have the possibility, as Strategy did in the US, to issue preferred stock. Preferred stocks are a form of stock that provide certain properties from stocks and certain properties from debt. The properties from stocks can typically be the equity valuation in the market, and the property from bonds can be that you don't have voting rights and that you have a form of dividend. And so Strategy has been using this to issue what is the equivalent of a monetary fund with a yield of 10%. And so this is an arbitrage between a credit market where you, as Strategy is doing, is giving up like 10% per year, but in fiat, and keeping 90% of the potential in Bitcoin, of course, which is much higher. And all of this, a company can do it step by step as well. What I would say is when you are a newly formed Bitcoin Treasury company, the first thing you will do is small raises with Bitcoin maximalist investors, typically in equity and or in BTC denominated notes. And that will typically allow you to grow from 0 to 1,000 or 2,000 BTC. And then within that period, you can also do some types of more traditional raises as well with a limited amount with financial intermediaries. There is one that is absolutely important, of course, is the ATM type capital increases. In the US, it is the ability for a company to issue its own stock and sell it in the market directly. In France and in Japan, for example, that is not directly allowed, but you can come around it and partner with a financial institution as well that will use existing shares to sell them in the market in specific conditions. In our case, it's only when the share is in strength in the market, when it's up, days that it's up, then the financial intermediary is allowed to sell some of those shares and reconstitute its stock of shares through a private placement, a subscription to new shares to be created at a specific price that is at the market, which can be the price of the day before, for example. And that allows to transform daily demand in the stock into new Bitcoin on the balance sheet. And by doing so, it's a program that a treasury can put in place, and that will allow the company not only to do specific private placements with BTC inclined investors, but also to have regular purchases of Bitcoin. And then that is the era in which we are entering now with capital B. It is to be able, through certain type of size, track record, and a proven ability to generate more Bitcoin per share over time. It is to partner with large international institutions on more large-scale type of transactions that are coordinated and that are professionalized and at a different scale. And that can allow the company to provide for the opportunity of enlarging its shareholding base with traditional institutions and to benefit from larger pools of capital, either in equity or in different types of instruments, such as the convertible bond. And then what can a company do is to capitalize on this strong Bitcoin basis to then issue very best performing securities, especially, for example, in public offerings that can be, of course, for participation of retail and as well institutions, either in equity or in the credit markets, and basically to become a leader in a specific country, in a specific region, for the issuance of Bitcoin-backed equity and Bitcoin-backed credit over a long period of time that allow the company to take advantage of the arbitrage between fiat and Bitcoin, and that allow the different investors specific to their mandate, either buying equity, converts, or specific types of instrument that could be between the two, and with different risk return profiles, to take exposures in Bitcoin in their mandate, in their preference. So you can have investors that want an exposure, but they want to have a 30% downside protection, and they want to have some type of exposure and maybe not having the 30 or 60% initial. That is possible. You can have investors that want a protection in BTC. That's the BTC convertible notes. You can have investors that want a protection in fiat. That's the fiat convertible notes. And that justifies embedded premiums that allow the company to provide for more BTC yield, the increase of Bitcoin per share, without being dependent on the ATM programs to just issue equity. And so the Bitcoin Treasury company is the objective to become a form of central bank for digital capital markets, where Bitcoin is the cornerstone asset, the most valuable one in capital markets over time, and the one that institutions and individuals want exposure to through a security that will provide for the right exposure for the right investor and provide for amplified results of Bitcoin over time.
So what I've heard people saying or asking is, well, that sounds great. You raise basically cheap fiat because it's debt and other instruments, but it's mostly a debt or debt-like thing, and the debt goes down in value because fiat loses value over time, and you buy the hardest asset in the world where the value goes up. So kind of makes sense, right? Yeah, kind of makes sense. But then people say, okay, but that only works when Bitcoin goes up, right? Would you agree with that? So this whole Bitcoin treasury strategy works if Bitcoin is significantly higher in 5 or 10 years from now, and it would not work if Bitcoin is lower in 5 and in 10 years from now.
The entire opportunity and risk of Bitcoin treasury companies is based on two main factors. The one is, of course, the evolution of the price of Bitcoin. And so if Bitcoin fails, a Bitcoin treasury company price will definitely go down. And if Bitcoin succeeds, a Bitcoin treasury company price may likely not go that down. And the second factor is of course, the ability of the company to provide for more Bitcoin per share. And so if the company is able through its capital market activity to generate more Bitcoin per share, then it's likely that its price may go up over time if the company is, of course, well run, all other things being equal. If Bitcoin continues in its trajectory of a CAGR of about 30% or slightly below, and anticipation is it would be between 30% and what the S&P provides, for example, over time. And that potential plus an increase of Bitcoin per share over time provides with a scenario where the likelihood is an outperformance of Bitcoin. And so, yes, if Bitcoin, the risk when invested in Bitcoin or in a Bitcoin treasury company is that the Bitcoin price may go down and or for a Bitcoin treasury company that the company is not able to increase Bitcoin per share.
Mm-hmm.
And so the whole analysis that an investor has to make with its own economic calculation is whether the valuation of the company at the time of the purchase of a stock will be exceeded by the increase of Bitcoin per share of the company and the increase of the net asset value adjusted for dilution over time. And if that is the case, then there will be a form of potential large outperformance of Bitcoin itself. And so an investor, when looking at a Bitcoin treasury company, the premium that the company has on the market is the risk for the investor, and the potential for the increase of Bitcoin per share of the company is the opportunity. And so investors are comparing this risk, the premium, with the opportunity and with the specific that the premium is also a representation of the anticipation of the market of the potential growth of Bitcoin per share as well.
Mm-hmm.
And the thing is that the specificity is that the company if it wants to be a great Bitcoin treasury company, should be focused on the issuance, the design, the issuance, and the scale of securities that can be issued with an embedded premium that does not depend from the valuation of the market, of its own ability to issue and to provide more Bitcoin per share. And so that is why at Capital B, since the very beginning, we have issued those BTC denominated convertible notes with an embedded premium of 30% that allows the company to generate more Bitcoin per share, even if the premium were to be 1. And that is, of course, also then appreciated by the market, that also anticipate potential of more Bitcoin per share, and in turn provides more opportunity for the company to provide more Bitcoin per share. And so that is why after we structured an NTA, an ATM type facility, because you want to be, of course, providing with regular addition of Bitcoin per share, and at the same time work on operations, transactions that can be of large scale and that can provide outsized potential increase of Bitcoin per share for your long-term convicted shareholders. And so that is our full focus, is in parallel to build the Bitcoin accumulation machine that can over time convert demand into Bitcoin on the balance sheet on a regular basis, and as well at specific times to build and structure transactions with either varied investors, institutions, for example, and or as well large types of holders of Bitcoin that can use our BTC convert with an embedded premium and maximize the number of Bitcoin per share. And you mentioned that typically it makes sense to have on the debt side fiat and on the asset side Bitcoin. The point is that with the BTC convert, since it is on a 5-year time horizon, if Bitcoin continues with its trend of growth, even at a minimal, at a lower pace, then 99% of probabilities is the conversion in shares. And so you never have to give back Bitcoin. But at the same time, yes, there is always a risk that Bitcoin doesn't perform that well. But even if Bitcoin stayed flat for 5 years, if the company is able to provide for more BTC yield, then the conversion can also happen. And so you have those two scenarios, is that the two factors that both Bitcoin may increase over time and both the Bitcoin per share may increase over time. And for those two reasons, the probability for conversion is close to 100%, all other things being equal. And in that sense, then it makes a whole of sense to allocate that Bitcoin for those BTC-minded investors into a Bitcoin treasury company to have a form of best-of between Bitcoin and the Bitcoin treasury company, but over a period of 5 years, because if you are at lower duration, then you take additional risk and the market also will price it.
So 5 years ago, there were, I think, 2 publicly traded companies that held Bitcoin on the balance sheet. MicroStrategy just started this Bitcoin standard for their balance sheet, and Tesla, I think, already had invested in 2017 or 18 a bit of their treasury. They now hold like 1 billion, and MicroStrategy, of course, now holds much more. I don't know, at this point, probably 70 billion or something in Bitcoin, and they're now a 100 billion market cap company. And now, 5 years later, we have, I think, 180, I heard Michael Saylor say lately, 180 publicly traded companies that have Bitcoin in their treasury or running some sort of Bitcoin treasury strategy. Now, question to you, how will that evolve in another 5 years? How will that market look like? How many Bitcoin treasury company will there be? How many are needed? is there going to be a consolidation in the market? Like, will there finally be maybe only a few? And why do we need so many different Bitcoin treasury companies? And what's the difference between them? Are they just all doing the same thing, or are they different types of Bitcoin treasury companies?
In 5 years, there will be thousands of Bitcoin treasury companies, but there will be differentiations in terminology to distinguish between the Bitcoin accumulation companies, as you mentioned at the beginning, which is what I consider to be a Bitcoin treasury company, by the way. The term was created by Strategy, and it means a company that is focused on the accumulation of Bitcoin in a way that maximizes Bitcoin per share. And so we have seen a trend of calling any company that has Bitcoin on the balance sheet as a Bitcoin treasury company. But I think that this is not quite correct. It might be a Bitcoin holder, a Bitcoin treasury, but a Bitcoin treasury company is very well focused on the accumulation of Bitcoin and especially on the maximization of Bitcoin per share over time. And so my anticipation is that even in 5 years, even if thousands of companies would have adopted Bitcoin as part of their balance sheet, a few of them will have remained hardly and strongly focused on the maximization of Bitcoin per share, and that especially a few of them will have gained a form of dominance on their regional markets. And that is, of course, our objective at Capital B. It is to gain and consolidate our leadership in the European market for the issuance of Bitcoin-backed equity and Bitcoin-backed credit. And my anticipation is that there will be a few more companies that will emerge as key leaders in the European industry. And an observation is that I believe that there will be various winners in this market, not only one, but that, of course, there is a competition for which player will emerge as the leader that has the most Bitcoin and the most ability to issue securities that are the best appreciated by the market. And so that is, of course, how we are positioning at Capital B. And those are our ambitions to grow towards 1% of the total BTC supply over 8 years and to go towards 21 to 42,000 BTC over the next 3 years and very much follow the steps of our inspirations, which are Strategy and Metaplanet. And you know, after 10 months of the strategy, we have the equivalent or even slightly more Bitcoin on the balance sheet that Metaplanet had. 8 months later, they are now at 20,000 BTC and going straight towards 30,000 plus. And so that's a major source of inspiration. That is the bar for us in terms of performance measurement, and that is where all of our focus is. And there is a lot of questions around what is the end game of a Bitcoin treasury? What will you do after you have accumulated Bitcoin?
Mm-hmm.
And how would you generate operational additional yield and so on?
Mm-hmm.
And my view is that the business model is exactly the securitization of Bitcoin. That will be true now and in the future, in 5 years, in 10 years. This is the ultimate best business model. Not playing with Bitcoin, not touching Bitcoin, not using it for other purposes. And then there will be market players that have a unique specialty and that will have as well, of course, a P&L that would be related to Bitcoin, and that is great. But in and of itself, the winning and the best performing and the most accretive strategy will remain the securitization of Bitcoin, simply because that is the strategy that is the most efficient to accrue value on the balance sheet of a company. So, it is not with P&L operations traditionally that you are able to grow the assets on the balance sheet from 0 to 200 million to 1 billion in a matter of a year, you know. It is typically with a Bitcoin treasury company strategy that you are able to do that, especially if you are able to issue Bitcoin-backed credits and in your market, and to, of course, have a strong base of permanent capital in the form of Bitcoin to do so. So that is where we are headed, and that is what I see is the best strategy. It is the simplest strategy, but as in engineering, the simplest way is the best way.
Absolutely. That's fascinating to think in like 10 years, basically in every region of the world, in the US, in Japan, in other Asian regions, basically wherever there are different currencies, fiat currencies, there will also
Yeah.
be different Bitcoin treasury companies, because there are different institutional investors that are mandated, that need to invest in certain types of equity, prefs, converts, debt, bonds, etc., etc. But then in 10 years, what exactly will these surviving and dominant Bitcoin treasury companies per region do? You said securitization. So is it like a bit? I think Michael Saylor said a Bitcoin-based bank. So is it like an investment bank, like basically what Goldman Sachs and JP Morgan do today, just based on Bitcoin? Or what will they do in 10 years from now?
I think that this question, and we get this a lot, is based on the predication that there would be a cap to the number of units of capital that could go into Bitcoin. And I would say that this is based on the fact that I myself used the term capital to say that this was going into Bitcoin. The fact of the matter is there is no really over capital than Bitcoin. It's the sentence that Bitcoin is money and everything else is credit. And so everything else is credit, and credit is quite infinite in that sense with fiat. And so in that sense, the today's total number of long-term fiat-related assets, when I said fiat-related assets, assets with no fixed supply, is about $1 quadrillion approximately. And so there is an assumption that when Bitcoin treasury companies would have absorbed 100 trillion of value at some point, or less, then there would be a form of cap. But when Bitcoin treasury companies would have absorbed 100 trillion of USD fiat and transformed that into Bitcoin, it is likely that there would not be $1 quadrillion of US dollars value of fiat related assets. There would be maybe 3 or 5 or 10 quadrillion. And so in that sense, what Bitcoin treasury companies could do at this point would still be to outperform Bitcoin with the issuance of securities that provide a form of exposure to Bitcoin in a way that it's best fitted for different types of institutions. And I would anticipate at that point, maybe in 10 years, that then there would be a lot of traditional banks that would partner with those Bitcoin treasury companies to provide more services around. But the Bitcoin treasury company role would still be to protect in the best way its most valuable asset, which is Bitcoin, and to not play with it, with not taking risk with it, because the most accretive thing it could do is to issue Bitcoin backed credit and equity to allow for more institutions to get exposure. Today, the size of the monetary market is 100 trillion. And governments, through the monetary system and commercial banks and central banks, are issuing, of course, a lot of government bonds. And the value of this is extremely, the number of those is extremely high. And so, in that sense, a Bitcoin treasury company is providing investors with either the outsized exposure to Bitcoin with a levered exposure with the equity, and it's providing a fixed returns over time to investors that want a fixed return through, of course, the Bitcoin treasury company operations. And in that sense, it is taking market share from monetary funds. Stretch, the new security of strategy, is literally a monetary fund with a 10% yield. If, as an investor, you have the choice with a monetary fund with a 3% yield and a monetary fund with a 10% yield, what would you choose? Well, the difference is if you don't still understand Bitcoin, you will still choose the 3% because you will consider that it's too risky, the other one. But if you understand Bitcoin, you will definitely take the 10% if you have the mandate to take a monetary fund type exposure in the credit market. And because if not, you would simply buy Bitcoin, but you are an institution and you have the mandate to buy a security in the credit markets. And so in that sense, you will, of course, purchase the security of strategy if you are in the US. You will purchase the security of Metaplanet if you are in Japan. You will purchase the security of potentially Capital B if you are in the EU and have this mandate. And so that is why I mentioned that the successful Bitcoin treasury companies over time will be the ones, the most successful will be the ones that are able to consolidate leadership into a region, because those will be the best rated securities that are Bitcoin backed. And over a period of 10 years, the Bitcoin backed securities will also be potentially the best rated. And so over time, those companies, the Bitcoin treasury companies, might be the most valuable companies because they would have the most number of Bitcoin, and Bitcoin might be considered at that point the best collateral asset. And in that sense, the companies that have the most of the best collateral asset would be the ones that could issue the most number of the Bitcoin-backed securities to accrue more Bitcoin on their balance sheet. And so you could have Bitcoin behemoths that would be a US one, a European one, a French one, a Japanese one, and each institution with a specific mandate would get allocated to those behemoths. And so in that sense, it's like saying, what is the next base use case for a central bank than creating money? No. If you are able to literally add more Bitcoin to the balance sheet through the issuance of securities that are in high demand in the market, then that will always be the most efficient, the most accretive business model. And then that doesn't prevent a company to have operations, that is, of course, great. But we are not speaking about the same type of opportunity between the two. The operations is more a side result of the capacity of the company to establish a global presence, a global recognition, global goodwill, and a global trust from large capital pools, and then be able to have partnerships over time of any type. But what is the best partnership for a Bitcoin treasury company? Is to literally serve as the treasury of private companies. And so private companies that take the risk of their own P&L operations can then use the Bitcoin treasury company that is listed as their treasury. And so the Bitcoin treasury company does not have to take the actual risk of the P&L to get the benefits of the profitability of the P&Ls of other private companies over time. I think this is very early, but it might come in the future as well. And of course, having a great P&L is of value to a company, but the best risk-adjusted returns are the ones of a Bitcoin treasury company.
It's amazing. As you say, we're still so super early. I mean, 5 years ago, there were one or two. Now there are 180. In 5 years, there will be thousands. I agree with you on that. I think this is definitely coming. And whether Bitcoiners like it or not, whether Wall Street likes it or not, this is a trend that is going to continue. So I encourage everyone to at least look into it and educate themselves and form an opinion. It's highly interesting. And thank you very much, Alex, for taking the time to explain all of these complicated issues to us. We could talk for hours and hours. Maybe we can do a second episode on this, because it's really fascinating. Thank you so much for your thought leadership and for your entrepreneurship in this topic. And I hope to hear a lot from you and Capital B in the future. Thank you for doing this.
Thank you so much, Julian. My pleasure. Cheers. Bye.
Bye.
Hey, this is Joel again from the Relai team. First of all, thanks for listening or watching to the podcast. We really appreciate your help here. If you want to actually help us out further, you can leave us a 5-star review in the Apple Podcasting Store, in Spotify, on YouTube, or wherever you listen to podcasts, because this way we'll actually reach more people with this fantastic content. And I'll see you in the next one.